Hello and welcome to Cryptoweeklies. Today we have a major update related to Ethereum. We have a AI-based forecast and DCA strategy related updates as well as some of the recent narratives related to Ethereum and its token Ether. We'll start with the last 24 hours worth of news summarized in a TLDR format. Most of the narratives bullish, couple bearish. The news related to Ethereum price jumping due to ACC probe clarity. Also, one more crypto market surge as Ethereum is declared as commodity by SEC, ending an investigation. But one of the not so bullish narratives related to Bitcoin, say, although it's classified as bullish by our machine learning model, that retail crowd is still missing. And then related to AI, Nvidia becoming the world's largest company by market cap, and Ethereum soaring about $3,500 again as SEC, that is Securities Exchange Commission, clears regulatory hurdles for Ether. So these are the bullish narratives. Again, one bearish narrative related to Bitcoin and MicroStrategy concerning parallels. Peter Schiff, who is a known uh, gold related investor and a critic of Bitcoin, has issued a warning. Again, could be bullish for some, bearish for some. So now looking at Ether in terms of its AI based price forecast, the the analysis that we have starting November 2017, the weekly price action of Ether on the white line, then the base case scenario forecasted by our model. Now that we are in the week ending June 23rd, 3552 base case scenario, and till about November 2024, the base case scenario is at around $4,051. Right now, the price of Ether is around $3,541, so slightly above the base case scenario forecasted by our model, which was trained again at around June 16th, almost 2 to 3 days ago. Again, the base case scenario just going forward is between 3,500 and 4,000 uh, to $4,050. In terms of the bull case scenario, the one standard deviation ceiling for Ether's rally, and at around 70% confidence level, is price action between $3,851 now to about $6,548 around November of 2024. That's the bull case for Ether between now and November. This is within one standard deviation, or you can say that without any mania phase for crypto, like what we witnessed in 2021, which was post-halving year for Bitcoin. If we stay within the course of avoiding that mania phase in 2024, this would be the most realistic bull case scenario forecast. None of the content on this channel is financial advice. This is output of our AI and machine learning model trend on weekly price action of Ether using techniques such as ARIMA, LSTM, and XGBoost. So going to the bear case, if let's say there is a bearish narrative between now and November, October 2024, the price action floor for Ether is between $2,300 and $3,200. If you're interested in looking at this in a week by week translation, we have that in a tabular format for base case, bull case, and bear case. The link is on the bottom of your screen, cryptoweeklies.com. You don't have to sign up or pay for anything, it's free for all. So in terms of the PeakValley analyzer, which is a composite analyzer between 0 and 1, this analyzes all top 100 cryptos by market cap and looks at their risk level based on factors such as alpha, beta, risk adjusted returns or Sharpe ratio, as well as percent drawdown and volatility, and comes up with a normalized score between 0 and 1, also with color codes between dark blue to dark red, increasing heat levels. Uh, the aim is to provide the risk reward ratio at any point in time. When the market is too heated, the color codes are red or orange. If the market has cooled down, the color codes are blue or green. Right now we are in the yellow color code, but what is curious that is that since March of 2024, these risk levels are going down uh, in a not so linear fashion, but you can see the trend is clear from 0.38 risk. Now we are hovering at around 0.21 risk. So this is again one of the key consideration for this upcoming weeks. If the risk levels were to fall below the 0.2 level, their color codes would shift from yellow to green, and that's when, in terms of historical performance, that's when the risk reward favors entering the market, whereas when the risk scores are above 0.75 or the color code is red, that's when risk reward favors exiting the market. So in terms of the narratives which are gaining some popularity over the last 7 days, is again definitely some of the bullishness has given away and the bearish narratives are back. Bitcoin and Ether are one of the bigger narratives, although the shape of or the size of Ethereum on this narrative wall or word cloud has diminished. It's still one of the major player in the market. This is a machine learning based data scraped from YouTube and X, content related to crypto on those platforms. So in terms of what narratives are gaining popularity, meme coins are again back in discussions. XRP, another altcoin, Cardano is again gaining some popularity in terms of popular narratives. Uh, Solana is over here. People are talking about if Bitcoin is dead, but again, this is a very small narrative compared to the other side of the story, which is bullishness. Buying, people are buying. ETF related narratives, altcoins are gaining some popularity. So this is one single discussion wall. Also, Polkadot over here, after a lot of time, is one of the altcoins on this wall. Again, people are talking about BRICS nations and also Bitcoin specific mining, um, and their ongoing concerns as well as opportunities. So this is the popular narratives over the last 7 days. In terms of which cryptos have performed better over the last 7 days, over the last day, Maker and Arweave have performed decently. Over the last 7 days, again, Maker and Uniswap have had decent gains. The losers for the last 7 days are Injective, Stacks, and Filecoin. Over the last day, again, Filecoin having a tough time, Toncoin and Sui. In terms of last 30 days, XMR and Kaspa and Uniswap are having decent time. RV and Phantom as well as Near and ICP are having a terrible last 30 days. Now the last 90 days, it's Toncoin has garnered most of the attention and most of the performance. Apart from Toncoin, XMR and BNB have had a decent 90 days. Sui, BitTensor, and Tau and Arbitrum have had a really poor last 90 days. In terms of the simple moving average risk, now that we are talking about Ethereum, we also have this for Bitcoin and Ethereum. Right now, the price of this is the analysis between price and the difference between price and the simple moving average, 20-week simple moving average. The key idea is that, and this is normalized between 0 and 1 to provide the risk bands at any point in time. The key idea is this, that right now the normalized risk score for Ether in terms of its distance between simple moving 20-week simple moving average is that at around 45. If we zoom it over here, the ETH related risk is at around 0.47 level. That means we are in the moderate risk regimen. We are not too far gone like we were in March of 2024 when the risk score was above 0.8, nor are we too undervalued like Ether was undervalued during June 2022. In terms of both, if we combine both of Bitcoin and Ether, we can see that both of them are, Bitcoin is slightly lower risk in terms of its distance between simple moving average, and Ether is slightly higher risk, but both of them are between 0.4 and 0.5 risk level. This is again one of the indicators that we used. In terms of Ether and its potential as a retirement vehicle, if Ether manages to stay relevant for the next 15 years and grows at around 8%, which is a very bearish case, considering Ether has had a growth of about 40 to 50% annualized performance. Even in this case, if Ether manages to stay relevant till 2040, the price of Ether at 8% growth would be at around $12,000, and number of Ether tokens without staking to be a ETH millionaire would be at around $83. So you can play around with different time series, different years, and the number of Ether token for each year. This is not just one year or one allocation strategy. This is for all of the years between now and 2040. Again, the link is in description, and also you can check it out using the bottom of your screen, the website, cryptoweeklies.com. If let's say Ether manages to grow at 15%, which is a realistic case considering Bitcoin's growth over the last 15 years, and also using stocks and their performance over the last 15 years as an example, uh, Ether as an altcoin or a riskier crypto than Bitcoin, growing at 15% would yield price at around $30,000. This again not financial advice. In terms of number of Ethers needed at that point to be a millionaire in ETH without staking ETH, it would be at around 32. So in terms of the growth at 22%, which is the ultra bullish case for Ether, some might still say that this is bearish, but we are considering compound growth. So there might be years when Ether grows by about 80%, but also some years where Ether has a decline in price of about 40-50%. So in terms of Ether growing at around 22%, the price of one Ether in 2040 would be at around 75,000, and no guesses if the price goes over there, the number of Ether to be a millionaire would be less than 14. So in terms of analyzing if based on his MVRVZ model, if Ether is overvalued or undervalued right now, but this analysis, Ether is slightly overvalued because the red line is above the zero threshold. In terms of Ether's regression analysis, you can see that the regression band, if we get rid of the top two regression bands, and the base line is in base regression polynomial regression function that we have wrapped around the price action of Ether at a weekly level, is the line in pink. The fair value per this analysis is at around 3,400. Price is slightly above it. The one standard deviation peak for this is at around $5,500. If you look at the historical price, almost 70% of the time the price stays within these bands. And if you want to be more conservative to the upside or downside, let's take up upside as an example. If we add the second band, you can see that price barely visits about 2.5% times spends around 2.5% of the time outside these bands to the upside. The two standard deviation peak per this analysis at this point is at around $8,700. But you can see that the price or the regression bands are in an upswing. They tend to be in upswing till the bull market is in effect. You can see that the last time in the upswing ended for these bands at around when 2022 or the bear market for Ether began. So considering that as an example, and to the other side, the one standard deviation bottom for Ether per this analysis at around $2,000 for Ether. So this is where Ether is in terms of Ether's. We did look at Ether's risk in terms of simple moving average using our SMA risk. But if you look at price color coded with respect to heat risk levels, and plot a risk level based heat map where the lowest risk is in like a rainbow or violet, whereas the highest risk is red. Right now, the risk level in the last couple of days is between 0.4 and 0.5, uh, just like we saw. But this is again in a to understand when Ether had a deep valuation zone. You can see when during June 2022, that's when based on, and this is not some retroactively fitted model. This is simply dividing the price by 20-week moving average and looking at how far it was gone, uh, and assigning those values. So in terms of dollar cost averaging ether, we can take a look at again, this is uh, not a simple moving average based color assignment, but the distance between the regression line over here and the price. That's how this model is calculated. The linear regression function fit to the daily price of ether, and you can see that the risk, when the risk levels are low, let's say right now the risk levels are below zero point 0.5. If you believe that dollar cost averaging ether till when the risk levels are not the highest, such as not when point between zero point 0.9 and 1, or let's say till we approach this band between 0.0 and 0.5, you can see that we are basically avoiding the peak mania phases of the last bull run. And if you think that it's still more risky, you can go down the risk levels and just look at ether when the risk levels are between 0 and 0.3. The last time we were here was back in May, almost a month ago, around 19th of May. Today is 19th of June, and dollar cost averaging during those time periods has personally been more beneficial in terms of how if we go further down the risk uh, levels. The last time ether was at zero point 0.2 risk when the price was 2500 and we were in February 2024. If we go further down, the last time to DCA ether at very low risk was November 2023, when the risk level was at 0.11 and price was at around $2000. So this is analysis of ether in terms of risk levels. Hope you enjoyed this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.